So let's kick things off with a quick poll to know you better. Please take a few seconds to respond. I request everyone to respond to this poll.
I hope you all would have responded. I think let's get started with the agenda for the today.
Sure.
So thanks, Asta. Thanks for the introduction and setting the context. So for next half an hour, 45 minutes, we'll cover these topics. So as we know, the agenda for today is element-based reporting. We'll try to understand what exactly it is, how it's going to impact you as a financial institution. What is the current state of EBR? Where what are the things going on? What is the expectation from the regulator? We'll also cover what are the different kind of challenges, be it in terms of functional challenges, technical challenges, people process related challenges. We'll cover in detail. And at the last, we'll take any questions you might have. Just before I get started, let me know if my voice is clear, it's audible, there's no audio issue, so that we can go ahead. If there are no comments in the chat box, I'm assuming it's all good. So let's get started. So talking about the EVR, first let's try to understand the evolution of regulatory reporting in Indian banking context. So as we know, RBI introduced ADF, which is for automated data flow in 2014. And that sets a major milestone in the Indian banking ecosystem related to the regulatory reporting, where the aim was to automate that entire process of submission of different kind of regulatory reports to RBI. Now, when we talk about automation, there it meant from your source system itself. From all the different source systems, we should be able to submit the data in a timely manner and accurate manner, so that there is least manual intervention. The entire process is set around that. And this followed a return-wise template, which we are all aware and familiar. So there are different sets of report, like your ROR report, RAQ, or your FIDD related reports, etc. Then in 2021, RBI introduced the CIMS platform, which stands for Centralized Information Management System. The aim was to transform the RBI internal data collection process, because we have more than 10,000 plus banks and financial institutions in India, where RBI collects data from all of these, and these data vary in from the entire breadth of the banking spectrum, be it, let's say, deposits, loans, or audit, or cards, bills, treasury related data, as well as covering different type of institution, be it, let's say, small NBFC to a large private sector bank to a very large public sector bank. So that's where this SIMS helped in collecting the data in a standard centralized manner through this platform. And currently, we are all doing the submission on this platform itself. This also introduced the different kind of cross-report validation that are there, because as we know, similar kind of information or attribute were being asked in different reports. For example, gross loans and advances is one of the line item in a ALE report as well as a REQ report. And there were additional these cross report validation which were introduced to tally that the numbers that we are reporting is right there. And now in 2025, RBI have started moving from a return-based submission to more a element-based submission, where earlier we were used to of a form-based templates. Now we are moving to an element, and which we'll talk about what exactly those elements are. But then here the focus is more on the metadata, the lineage, the reusability of all these data elements, which essentially will help RBI in slicing and dicing of the data the way they want. Currently, it's all in a predefined format, and then they are doing their analytics to come up with the different kind of supervisory insights, let's say macro data, etc. Now, here through these element based, they would be able to do their own slicing and dicing of the data in a dynamic manner for their risk assessment capability. So, what exactly is EBR? Now, to understand EBR, I think first we need to understand the RBR, which is the return-based submission that we are doing currently. So as we know here, we have a fixed format for all of these different kind of a report. Now, there are more than 80 to 100 plus reports, depending upon the kind of financial institution that they have to report. Now, these returns are having a fixed structure there. Right? Be it, let's say, ALE report or a collateral loan report, the structure is fixed. Now, the format changes. Most of the reports for banks and NBFCs are in XBRL format that we have to do the submission. There are a few TXT-based submissions reports as well. Currently, these all reports are submitted on the CIMS platform, but there are a lot of data elements which are overlapping in nature. One example I gave around gross loan advances. So that way around there are more than 50 plus cross report validation, which essentially matches your one cell of the report to another cell of the report. Now, this is leading to a lot of data inconsistencies and also additional reporting burden on the regulated entities. Now, that's where RBI is trying to move away from this return based to an element based reporting, where each data element would be reported only once. So here we are kind of removing the redundancy that we have currently, removing any data element level duplication that is there. Now, how that is being done is using STMX standard, which is a statistical data and metadata exchange standard set by international bodies. So there are 8 different international bodies like World Bank and ILO and the ECB, etc., which has defined this standard, this data exchange standard through which data can be moved from a supervised, from a regulated entities to a supervisor. And RBI has also adopted that approach to get the data in these format to, let's say, remove the data redundancy that we have currently, to reduce the reporting effort on the entities, as well as to remove or enhance the data consistency part. So let's understand the different concepts of EBR. So first, on the element itself, what is an element? So the way RBI has defined an element is like a business concept. So let's take an example, loans and advances. This is one business concept. Or deposits, or cards, or bills. These could be different kind of elements. Now, I can see loans and advances for my domestic operation, for my performing assets. So then these are the different kind of dimensions through which I can cut a given element. And that's where dimensions come into play, where there are these kind of different dimensions have been defined. Like area of operation is one dimension. Asset quality is another dimension. Now, these dimension could also be of different kind, which will cover, let's say, open dimension and closed dimension. But if I want to see that what are my performing loans, which are domestic in nature, so then this combination becomes a data model ID. So all my loans and advances, which are of domestic nature, which are performing in nature, is one combination, and RBI is calling it as a data model ID, identification. And they're giving a unique code to this particular DMID. So let's say in this particular case for loans and advances, domestic and non-performing, DM002 is given a unique DMID. And essentially this unique DMID is one cell in our existing report. So that way for all the different cells, there would be different data model IDs. Let's try to understand in more depth by taking an example through an existing report. So this is one of the report that we are currently submitting as a FI to bank, collateral loan report. Now, this report essentially here we have to submit data around what kind of loans that has been sanctioned in the previous quarter. This is a quarterly report. And there are four section collateral loans which are collateral free up to 10 lakhs, collateral free loan up to 10, but under CGS scheme, credit guarantee scheme, then collateral free loan between 10 to 25 lakhs, and then 10 to 25 lakhs, but under CGS scheme. So these are the four different sections. Then within each, we have to report that what were the amount that were, let's say, sanctioned during the quarter, what were the number of accounts that were sanctioned, and then also what is the outstanding position at the end of the each quarter basis the number as well as outstanding for all these four sections. So this is one of the existing report. The CIMS code for that is R03 that we are currently submitting. Now here you can see these are the different cells that are there. Essentially, this report has 16 cells that we need to submit today. Now each cell here becomes a different each DMID in the element world. So RBI has provided one data structure definition, which essentially define that how these cells are created. So this is the DST for the this particular report, for collateral loan report. Now here, let me just use the presenter view. Yeah. So here, these are the different cells that we saw earlier. 1, 2, 3, 4. And then RBI has given these different definition. So for cell number 1, these are the definition that is given, which essentially tells that this is the element that has been defined for this report. LNA CGS, loans and advances, credit guarantee scheme, and then the version of that also. So we are already have got the third version. So RBI keeps on updating it. They are also doing multiple changes, iterations on their side. So this is the element that we are seeing. How this element is formed? Through these dimension. So essentially there are three dimension here: CFL ME, CFL bucket, and then currency. And these are the values of this dimension. Now, these are closed dimensions. So what do we mean by closed dimension here? So let me try to explain. So this is one of the dimension that we saw, CFL bucket, which essentially is collateral free loans amount bucket. Here we have four possible values: loan under 10 lakhs, loan under 10 lakhs, but under CGS scheme, loan between 10 to 25 lakhs, and then 10 to 25 lakhs with CGS scheme, which we saw earlier in the report as well. These are the four sections. So these are the four values that this dimension can take. And that's why this particular dimension is a closed dimension, which essentially means that it can have a predefined values. The values would be given by the regulator, but then it will not have it can't have any number of values. So these are the four values that this dimension can have. Similarly, if we talk about the other dimension, CFL ME, it can have these four values: amount outstanding, amount sanctioned, and number of accounts at the end of period, and then for that period. And that is where for cell number 1, it is checking for num FP, which is nothing but your this one number of accounts for the period, and then loan under 10 lakhs under the bucket one. So all my loans which are under 10 lakhs, I have to report the number of accounts and in the given currency. Now currency, here we have all in INR. So that's why this is still as part of the closed dimension. We have to report only in INR. Then next one, okay, sorry, let me go here. So next one, we can have some open dimensions. In this particular report, there is no open dimension included here, but then for other few reports, there could be some open dimension. For example, let's say country. If we are dealing with multiple different countries, I have a loans in Forex denomination, there I can have loans originated in different countries. Let's say as a bank, I'm dealing with 5 countries. So I will have those 5 countries values here. If another bank is dealing in 20 countries, so they can have 20 values here. So that's where open dimension will not have a predefined list of values. The number of rows that can come under currency can vary from a bank to bank or from a FI to FI. So those are different open dimension. Many times in our reports, we also have, let's say, others, please specify. Now, in others, there could be one row or there could be 10 rows as well. So that's where these are the example of open dimension. Then we have some common dimension, which are essentially used across all the elements, like whether these are audited in nature, what is the frequency of the report, what is the time period, and then the observed value, which is your reporting value. So that is what here we can see. So we covered open dimension. These are the different common dimensions. Observed value is the one which we need to report, which we are currently reporting in our RBR submission, return based. And then also there are certain validation that RBI has included, which essentially here says that minimum value that is reported, the length of that should be 1 and maximum can be 10. Now, currently there are basic validation that have been included, but then RBI has also mentioned that there could be a lot many validation that would be coming up in the future taxonomy of the report. Then we also have other details, which essentially tells that whether these are independent or dependent in nature. Essentially, whether these are derived, wherever we have total column, where we do the summation of all the above line items and we report total, those would be coming up here. Currently, I was only asking for the independent one because the summation derivation that they can do themselves. So this was the example of the how different elements are constituted for a given loan. And this was for a given report. And this was example of the collateral loan report. So I hope you have understood the different concept. What is an element? What is a DMID, which is essentially a combination of the different dimensions. And then each DMID becomes specific cell in my report. Now that way, we can do the mapping from a return to element. That one return can have multiple elements. In this particular report, we saw there was only one element. So it's straightforward, one report, one element, and each element we're having multiple data model IDs from 1 to 16. But then it can also happen that there are multiple elements as part of one report itself. For example, for ROR report, we have 6 elements. Now, if I talk about ALE report, there we have 38 elements. And that's where the complexity comes in. Now, one element can also come from multiple returns as well. So here we can see, let's say for this bills purchased and discounted, this is coming from ALE report as well as REQ, monthly, annual, and quarterly as well. Similar way here as well, deposits is coming from my ALE, LR, and yeah, ALE and LR of different frequency. So one element can also come from multiple returns as well. So that's where we need to do this mapping exercise where how to map different elements to different returns. So this was more around the overview part. Now I'll move to the next section where we talk about the current state. Just to let you know, if you have any question, please you can type in your question in the chat box. I'll take all those questions at the end of the session. So in the current state, RBI is doing POC in a phase-wise manner where they have selected specific institutions and specific set of reports for the POC of EBR. Now, currently the POC is also done at a return level, where for each return, whatever the different elements that are there, that is being asked to submit to RBI. Now, as so far currently, they have included these 22 reports, 16 reports from FIDD, like your collateral loan and credit to minority, etc., and then 6 reports from ROR, from set 1 reports. Now, out of these, we have already submitted 11 reports to RBI, and we are awaiting the latest file for other reports, whichever are in the scope for the submission part. So RBI is also doing a lot of development work, changes at their side, because they're also parallelly building up their internal data system to ingest the data, to process the data. But whatever report that they have given the taxonomy, we have already submitted, and we are already working with few of the financial institutions in the country. So that way we have already done all these submissions as well. So let me take an example that how we have done the submission, what were the different steps there. So taking an example of this collateral loan report itself, there we have used whatever submission that were done for one of the past date for 31st December 2022. The input that were required here was first on the data structure definition, the file that I showed you earlier, that these are the different files given, essentially the taxonomy given by RBI, which also includes the DMID. And then they have also given one sample CSV just to test out that this is the structure in which the expected output should be. And then whatever return that we had submitted for this period. Now, here we are using the actual reporting values. We are not doing scaling in our existing returns. We have to report at a scaled value where some elements or some cells are asked in lakhs or crores, etc. Here it is all being asked at a actual reporting value. So what we did, we took the report, the existing report that were submitted. We took the RBI provided DMIDs definition, data structure definition, and then we have built one mapping utility, which essentially transform all my cells of the report and converts into elements, and then map all the reporting values to those elements. And then it gives me a structure in which through which we can generate the EBR XML file. Now, there's another step that was added in the process where RBI said we also have to populate a data model which has been defined by RBI. And I'll show you those working files as well, that what are those and how we have done. So here, once my data has been populated in my underlying table in RBI defined data model, then we took out an CSV, and then through the EBR converter utility, we were able to generate the EBR XML file. Now on the converter utility as well, RBI has provided their own utility. We have also built our own utility. Now, since these utilities are based on the STMX standard, which is a available standard, so that's how we were able to build as well. And then the output of same was matching, and we tested on both sides, and then we were able to submit to RBI, which was successfully ingested and processed by RBI as well. So that's how the steps went in. Now let me show you some of these files and what was the final output. So as we were talking about the report, so I'm taking the same example, collateral loan report. So this is the format that were given. Here we can see these are the collateral loan report. Then this is the definition, DST definition that were given for each of the cells. So this is what the explanation or breakdown of this is what we talked about earlier in the given slide, that what exactly these elements are. Okay. So code list dimension, etc., dependency, validation, etc., that were given. Now this was one of the input, and then we had data in this particular report, which we received from the bank, and then we used that to create this structure in which is essentially required for my generation of the report. So these were the different data model IDs. Essentially, these were the, let's say for the first one, loan under 10 lakhs. So essentially 31,749 accounts were sanctioned during this quarter, which were under 10 lakhs collateral free, right? And these were the amounts that were there. So this is the final output in this table structure that were populated. Now, basis that, we generated this particular XML file, which is your EBR XML file. So here you can see this is the element which is being asked, LNS CGS3. And then these are the different 16 cells which are being asked from the report. And the first one where we talk about that these are audited in nature. So this is the element, frequency is quarterly. number of accounts, loan under 10 lakhs and currency NA for that particular period. This was the observed value, which is 31,749 that we saw earlier. So that way it generates all the different 16 cells of the report that we were talking about. And this was the file which was essentially submitted. And again, the submission happens currently on CIMS platform itself, which was accepted and processed by RBI. And this is the final RBI defined data model in which we had to populate the data. So here, this one is the exhausting one. So here, let me go to that particular element, LNA CGS that we were seeing. So after, let's say, populating the data, essentially we have to populate this table as well, where for each element version, for which entity that we are doing the submission, what is the, for which dimension, currency, we have to report the observed value. And these are the different attributes that we have to store for all the different elements, essentially, when it was done, what kind of dependency type, whether it is derived or non-derived in nature. So this was also populated. So this covers from our experience of doing the submission, doing the POC part. Now, let me go to the next section, which talks about the challenges. So after doing this more than 10, 12 plus submissions, what we have realized that EBR is not that straightforward. It comes with its own challenges around multiple different areas, like functional challenges. So first is, of course, on the loss of the familiar format itself. So as a business user, as a functional user, we are all used to seeing our report in that particular form, be it ALE or REQ. We are used to that. If we are talking about ALE, where we have cash in hand, and then we populate that, okay, 1 lakh or whatever the number that is being reported. But in EBR world, there is no predefined format. It is essentially a combination of these different dimensions, and DMID is what essentially represents that cash in hand. So it becomes difficult for the business users to interpret. It also adds a complexity in terms of the different dimensions that are there, which are the open one, which are the closed one. So we need to understand and do upskilling ourselves to understand and interpret in a better manner. Then also, as part of even current submission during the POC itself, RBI is also doing a kind of a matching with the previous version that was submitted and this EVR version that we have submitted. So essentially, it also needs to reconcile that whatever number that we are reporting in my current SIM submission should also match with the EVR submission that we are doing. So it also adds additional activity in terms of the recon that is required between the two formats. Then here RBI is also asking for merging all the different XML into one file. So here we are all used to this is one report, there's another report, and then we do the submission as per the frequency of those report. But here, what is being asked by RBI and the end state at which they are asking to do all the submission, create all the XML file, merge them into one, and then do the submission. Now, this particular activity brings a lot of additional activities that would be required and challenges as well, where first is in terms of the technical aspect, which I'll cover, but then to merge, first we need to have all the data. Now, these data were coming from different sources, different teams. We need to close the books early. And that's what we have seen with a few of our clients as well, where they are preponing their board meetings to close the books early. So that once my books are ready, the numbers are finalized, then only we would be able to generate, let's say, the different return-based EBR XML file and then convert into one and do the submission. So this adds additional burden or headache for the business folks to manage everything within the stipulated timeline. From a technical perspective, first, as we saw, the mapping is not straightforward. There's a lot of complexity. One element can come from multiple returns. One return can have multiple elements. So it is not a straightforward mapping. The orchestration of merging the different XML files, 20 plus files, is a quite technically complex process. Though RBI has given another utility through which that merging is also done, but still first we need to get the data for all the returns, all the XML file generation needs to happen. Then we need to upload all the files, then merge it, and then the challenge also comes in terms of the submission, where once we merge all these 20 plus files, the file size itself becomes quite huge, and it takes a lot of time to do the summation. And now, from a practical perspective, we are all used to submitting on the last date at the last time. Now, suppose 12 o'clock is the deadline. I have done the submission at 11:50 or 55. From our perspective, we have done within the time, but then the file going through the transfer itself might take 10-15 minutes because of the size and technical challenges. So essentially, then if it crosses 12 o'clock, we have delayed the submission technically. Right? So it brings those kind of challenges as well. Version control related challenges, where RBI is changing these DSC structure quite frequently, because this is still under a development phase for RBI also. As we saw, third version of element has already been introduced so far, which is still under POC phase for the RBI as well. So there's a lot of change coming up from the RBI. So essentially, uh, from a system perspective, it needs a metadata driven solution. So it's not that straightforward that you ingest a DST. Whenever there's any regulatory change that happen, your system should be able to do it in a quick and fast manner without disrupting your existing process. Then, as we saw, a lot of these elements is coming from different combination of dimensions. So there may be a possibility where, let's say, your current system are not capturing at that dimension level. So we might have to analyze those and then prepare for those granular data as well. And also the way we are expecting, we will have a parallel run phase where we'll have to do submission on both return-based submission as well as EBR-based submission. So there's added burden on maintaining parallel infrastructure, both for the IT teams as well as the ops team. From people process perspective, so here currently we are all used to return preparation, where there's a clear ownership lying between different teams, different user for different kind of returns. But here, since the way RBI is expecting it is at a element level, to now focus is more on the data part. So we expect that there could be a change in the way we are doing the reporting. So from a return preparation, it will shift to a more like a data validation and interpretation. There could also be changes in terms of a return-wise ownership to element-wise ownership. And all these returns, so here currently we are doing, let's say, 20 plus report, but then the expectation is to essentially sunset ADF and have all the returns which is being submitted currently as part of EBR. So this would require a lot of collaboration between different departments within your finance, risk, IT, or ops to align at the element level, which will also require a lot of additional bandwidth effort, be it in terms of your data transfer between different teams, coordinating between different teams, handling the recon, handling the validations, failures, etc. And it would also require a lot of training needs as well to understand these concept itself. What are the EVR? What are the dimension combination? What are the validation that are there? What are the different workflows related to this? Now, to wrap it up, essentially, EVR, the way we are seeing it's just not a technical upgrade. It is kind of redefining the way we are doing the submission currently, the way data has been defined, governed, or validated. So it will drive structural changes within organization, be it in terms of their collaboration model, their reporting roles or governance or the timelines. So I think it is imperative for the banks to start planning for this as early as possible, because the ripple effect of all these changes, uh, if we start doing that early, it can make the entire process much smoother in adoption, as well as mitigate the risk that can come from the overall change that is going to happen. So I'll just pause here. Now, I think, yeah, we have taken almost 40 minutes, so we have some time to take few of the questions.
Thank you, Abhishek, for that insightful session. We are now moving into the Q&A segment, so please continue dropping your questions in the Q&A box. While we take your questions, we are also launching a quick feedback poll. It will just take a few seconds and your input will help us make future sessions even better.
Yeah, so it's just a quick poll. I request everybody to answer it so that we'll also get some feedback that whether the content, the presentation was as per the expectation, whether it was helpful to you. And we also intend to cover more webinars on the same topic. So today we covered mostly around the what exactly is the EBR and what is the current state, what is the expectation from RBI. And in subsequent webinars, we'll also cover our product angle, where we'll showcase what exactly we are doing, how we are trying to address these challenges through our product, what is our roadmap around EBR, etc. Yeah, Astha, can we take some of the questions?
Sure, sure. So the first question we got is whether the bank have to submit the data to your tool in Excel format or not.
Yeah, sure. So here, yes. So here we can ingest the final report that you already have submitted, right, in the Excel format itself. So the way I showed that report, collateral loan report, you can provide us the data into the same format. And through our tool, we would be able to ingest that report, have the RBI defined data model populated, and then also generate the final EBR XML file that needs to be submitted to RBI. So yes, so once you provide the report in the Excel format, the final output, whatever is expected from the RBI side, can be generated through our tool itself.
Thank you, Abhishek. The second question is how EBR XML is generated as it requires validation with RBI return taxonomy. Have RBI provided this utility to validate and convert in XML? If yes, can you show if possible?
Yeah, sure. So how EBR XML is generated as it requires validation with RBI taxonomy. So see, first of all, I think these are two different things. So one, the way we are doing currently through XBRL, there also there are a lot of validations that are inbuilt as part of the XBRL tool. Now, as part of the EBR XML, there are certain validations that are there, which let me showcase again. Second. Yeah. Yeah. So here you can see there are certain validations that is already included in this EBR format, EBR taxonomy, but currently it is very basic in nature. But we do expect more validation to come here, right? Which RBI has already mentioned in our conversation. So currently it is all basic in nature, but then there will be more validations that are there. Now, once let's say we have generated, now coming on the EBR XML generation part. So here once we have the return based data and we have the data structure definition from the RBI, we are able to generate first the data model, and then through the converter utility, this essentially transform my, let's say, data in a tabular format to a EBR XML format. So this utility itself does the transformation.
Okay. Thank you, Abhishek. Another question is, what is the expected timeline from RBI to move to EBR from the current state, since we have not formally heard anything from the RBI on this?
Correct. Yeah, so good question. So there, the way we are seeing currently, there would be three phases to call it out. Currently, RBI is also in first phase, which is a POC phase, where initially they started with 4 banks. Now they have expanded this to 20 banks to do the submission. Now they started with initially they started with the set one report, but then they were also not ready on there, and that's where they included these additional FIDD returns as well. So they have started with, let's say, these limited set of returns. So this is where I'm calling it as a POC phase, where both banks as well as RBI is preparing for the readiness from a, be it a functional perspective, technical system perspective, to do this EBR submission. Next phase that we see would be more like a parallel run phase, where we'll have to do submission both on the CIMS reporting as well as EBR reporting. So now this parallel run can run into months or even years, that we don't know. It all depends upon RBI. But yeah, there's no defined timeline given by RBI. So this particular even there's no circular available in the public domain related to EBR submission. This has all been communicated directly with the banks and meetings that have happened. But we do expect this to be rolled out probably at the end of the year. But yeah, exact timeline is dependent upon RBI. So phase two would be more like a parallel run. Then we expect the third phase, which would be more like an end state, where we will only have all the elements and all the returns that we are doing currently as part of ADF or CIMS would be sunset. So then only element-based summation would be there. So that's how we are seeing it. But from a timeline perspective, it is all dependent upon RBI.
Okay. What is the purpose of EBR? Why RBI is moving to this EBR if there is already XBRL based reporting?
Yeah. So currently, though RBI has mandated to do, let's say, ADF, which is a full automated based submission, there's still some kind of a manual intervention that happens for genuine purposes, valid reasons. There's a report-based submission where there's a predefined template structure in which we are submitting the return. Now, once that is ingested, further RBI is also doing a lot of analytics on top of that, slicing and dicing of data. Now, the aim here from RBI perspective is to first get the data at an element level, where now as a regulator, they are not dependent upon these returns. Once they have the data at an element level, they can do all the slicing and dicing themselves, the way they want to do their analysis for generation of different insights, right? Supervisory insights or a macroeconomic insight. So they can do themselves at that level. Another reason was more around the data inconsistency that we have currently. So there are a lot of elements which are, or a lot of, let's say, information which is asked across multiple reports. So be it, let's say, NPA related or loans related or other different returns are asking same kind of information. So essentially for a regulated entity, they have to duplicate the effort of providing the data around that, be it, let's say, getting the data from their source system, then massaging it, putting the logic, getting through the validations, workflow, etc. So it's a lot of duplicate efforts for the banks as well. So that's where they're trying to remove that duplication, where only once this particular information would be asked around any business area. And that's when it is being called as an element. So if loans and advances is what they require, they don't need to ask through multiple returns. Once that is provided, it can be further analyzed by the regulator. So that's the whole objective, the way RBI has also defined in their communication, to reduce the duplication effort, to remove the added burden in terms of providing multiple different reports. So currently also we have more than 100 reports of different frequency, different nature, and a lot of time is required to do the submission. Now, if we just see from the end state perspective, and once we have automated this entire process, then there would be a lot of less effort that would be required even from the bank's perspective as well.
Okay. Will the EBR submission be report wise?
Yeah. There also, so as I mentioned, currently as part of the POC phase, yes, we have to do report-wise submission. So for each report, let's say FIDD, for a ALE, for a ROR, we have to do depending upon how many elements that are there. So just to give an example, as we saw for collateral loan report, we have only one element. So we need to, for this report, one element we need to generate and submit to RBI. But if I talk about ROR report, there are 6 elements. So essentially we have to generate 6 elements. and then probably merge all the 6 elements into one consolidated XML file and then submit to RBI. So currently, yes, as part of POC phase, we have to do return by submission. But then in the end state, all these returns would be sunset, and then we'll have to do at an element level.
Okay. Once the parallel run is over, would we still have to prepare the returns to arrive at the elements?
Yeah. So they are also not required as per regulatory expectation. So essentially two parts to answer this question. So from a regulatory obligation perspective, you don't have to prepare the returns. But then from a business user perspective, from your internal process perspective, I think still you need to prepare returns first to do, let's say, the validation between these submission, as well as for your own internal consumption purpose. Because we are not used to element or a DMID. If I just say DMID 002, which is your collateral free loan up to 10 lakhs, no functional user will understand, right? But if somebody tells that, okay, tell me about how many loans were sanctioned between this quarter, which were collateral free loan up to 10 lakhs in a report format, everybody will understand. So that way, though the mandatory obligation is not there to prepare, but I think people would still prepare some kind of a report so that first it can be cross-validated with the EBR submission as well as for your internal submission purpose, internal analysis purpose.
Okay, we have another question. Where the data will get fetched to this application?
Yeah. So here, there are two ways in which we can do the EBR submission. One is through your existing return itself. So whatever return that you have submitted, that itself could form the source for us, where you can provide us that return with the data, and that we can ingest and provide you the EBR XML file. That is one way to do, and which is much faster way to do as well, where you already are generating those reports. Another way to do is through the base data, granular data. So whatever granular data that is required for the calculation purpose, so we can ingest that and then write different rules to populate the EBR cell and then generate the EBR return. So both ways it can be done. So we are calling it more like a two ways. One is your last mile reporting, where you already have the final numbers, and we are doing the XML generation, EBR XML generation with all the RBI defined data model, workflow, etc. Second way could be your full automated approach from your base data itself.
Okay, we have one more question. Your EBR converter shown in process flow utility simply converts CSV to XML, right, without any taxonomy validations, right? But they are using ADF return template data to prepare their DSD DIM ID. So they are not moving away from XBRL ADF based reporting. This looks to be additional activity.
So first on the first part, while we are converting from CSV to XML, we are also doing the validation that are being asked as part of EBR taxonomy. So there's still some validation that are there, though currently it's not a very complex validation, but validations are there and we are performing those validation.
For phase 1 of POC, is RBI is strict in submission for the same in the given timeline?
Yes. So though currently there is no, let's say, specific timelines given by RBI to all banks, the timelines are given specific to each bank, right? There is no one timeline, let's say by 31st December, all banks have to do. It is more communicated directly to the bank, and they are depending upon their readiness, the bank readiness, their system preparedness. They are telling the timeline. Now, the timeline could also vary, because the way we have seen even in case of CIMS as well, suddenly one day RBI can come and ask you to submit, let's say, these 10 FIDD returns in 2 weeks of time. So that is totally dependent upon RBI, and RBI will tell you at what in what time you have to do the submission. So currently it's not made like a general public statement. It is communicated directly to the bank.
Okay. What are the changes expected from EBR when it comes to uh, market risk based calculation in reports like RCA3, LCR, NSFR? Will it be done through EBR?
Yes. See, the overall expectation as communicated by RBI is to include all the CIMS reporting that we are doing. So let's say your RCA3, your BLR report, those all would be included as part of the EBR itself. Though let's say Basel report, like your NSFR, LCR, not sure whether those would be included or not. So it depends. But currently, whatever that we are doing as part of the CIMS reporting, ADF reporting, that all would be included as part of the EBR.
Okay. Can we get a view in terms of how Fintellix would be able to help bank transition to EBR from current CIMS reporting without much disruption?
Sure. So, as part of, let's say, if you are already, I'm not sure from whom we have got this question, so I'll answer it in two ways. So, if you are already using our regulatory application, then it becomes a pretty straightforward, easy process where we would already have the data. Then we can just add the EVR module, and then it will take the final data that you are doing and generate the EVR XML file. Now, for any new customer, so there they can use our EBR solution through which, basis their existing returns that they are submitting, they can provide the data into that format, that into that Excel format. And using that Excel format, we would be able to generate the EBR XML file. Now, here also it is a much faster straight through process where, because we are not doing the computation part from the base data, the process becomes much faster. So if you already have some kind of a system through which you are doing the ADF submission, that can be leveraged to get the final data, and then our EVR solution can help you generate those EVR XML file along with lot of additional functionalities like taking it through a multiple workflows, providing all the validations. If you want to do, let's say, further changes, etc., or to track those changes from an audit perspective, those all would be available as part of the EVR solution.
Okay. What are the timelines for this change?
So currently, as I mentioned, there's no specific timeline mentioned by RBI, but then they have started asking all the banks to start preparing for it. So the communication is also going in a phase-wise manner. So they started the POC with 4 banks. They included 20 banks. So currently 20 banks are expected to do the POC submission. Then they're also asking small finance banks to start preparing for this. Subsequently, they will also ask all the foreign banks, and then probably later to all the NBFCs as well. But this will be the future of regulatory reporting. So please start preparing. Please start working around it. Understanding the concept, having those discussion. Who are already doing it, or let's say players like us, which are already working with multiple banks in generating and doing the submission on EBR.
Okay. CSV is having lesser columns than the table structure. Please explain.
So CSV that you saw was more around the for that particular report where, okay, let me go back to the CSV. So here we are generating this CSV, which essentially goes to this converter utility, and this is the output, where this is the information, the data structure definition, which is being asked. So these are the different 16 DMIDs, which is being asked as part of that report. What is the currency and time period, and what is the observed value? And these are the dimension that is being asked. So this is being generated as per the format given by RBI itself. And these are the numbers which is essentially coming from the return itself.
Okay. Is RBI providing master data for validation to ensure correct submission? Is Fintellix tool in line with RBI requirement?
Yes. So RBI is providing the, let's say, these DSD, the data structure definition, as which also includes the validations as well. And then the way we have built our solution, it essentially conforms to all those validation. It checks for that. And then only we, let's say, after successful validations, then only to be able to generate the XML. Otherwise, it will show you that these are the errors that are there. And we should also be highlighted within our application so that we can go debug that essentially.
Okay. EBR is a part of Fintellix itself, or will there be a fully different interface or app banks will use it for reportings?
Yeah. So Currently, we do have regulatory reporting solution through which we automate the entire process of generating the different returns. Now because this new regulation is coming up, so we have already included an additional module, which essentially will help in the parallel run phase as well as your POC phase. And then we are also enhancing that module through which, let's say, when we talk about the end state where we only have all the elements, so those would also be there. So there, as I was mentioning, that there could be challenge in terms of seeing the data, reconciling the data between the returns and the elements. So how do we show that? So all those functionalities, dashboard, screen should be available as part of that full-fledged EBR module.
Okay, we have another question. Is other list of returns or reports ready for circulation from RBI side? Can we get the same?
So currently we have received only, or RBI is asking only for these returns, FIDD 16 reports plus your Set 16 reports. As and when we receive more information that what are the additional reports that are being included, we can share that information.
Okay. For EBR, will there be a new set of applications that need to install, generate the EBR, or on the existing infra, we will be able to generate with minimal changes?
Yeah. So it will, let's say for our existing customers who are already using our application, so there this will be another module that would be added in. For a new customer, yes, we need to install our EBR module and through which we will be able to generate.
Okay, we have few more questions. If the EBR submission is going to be report-wise, will the same element be required to be generated multiple times and thereby defeat the purpose of getting the same data multiple times?
Correct. Absolutely right question. So yes, currently, because we are doing return wise, so just to take an example, that loans and advances, which is being asked in my ALE as well as REQ. So yes, we do have to report element while we are generating same element in both cases. But then currently it is more like a POC phase where we are doing a return wise submission, or let's say even during parallel run where we'll do return wise as well as element wise, but subsequently this would be removed. So only at one place this information would be asked. So that way this duplication would go away eventually. But yes, currently we are duplicating the same elements across multiple returns if that is the case.
Okay. Can you help to know which all utilities converter RBI has shared? Is it in public domain or only shared with banks or FIs? If it is in public domain, then can you please share the links? What is the implementation timeline for phase 1 POC? Is there any deadline shared by RBI to banks?
No. So first on the utility, so RBI is also updating their utilities. Now we have received a latest one, which essentially does the generation of XML and merging and the submission as well. Now this utility has been directly shared with the financial institution. It's not available in the public domain. And second, on the timelines perspective, currently, as I mentioned, specific timeline for a specific bank is communicated directly. There is no generic timeline given by RBI. So please check with your compliance team if they would have received communication from RBI. So there itself, they are mentioning by when they should be able to do the submission. So initially, it is more like a POC where they're expecting the banks to submit few of the returns, or let's say all these returns as well. So it is again a specific to each bank there.
I guess we are done with the questions.
Sure.
Okay. Thank you, Abhishek, for that insightful session. If we missed answering your questions or you would like to continue the discussion, feel free to write to us at sales@fintellix.com. As mentioned earlier, the recording will be shared you with email, also published on our LinkedIn page. That's a wrap. Thank you all for joining us today. We hope you found the session valuable. Until next time, take care and have a great day ahead.
Yeah. Thank you. Thank you everyone for joining. Hope this was a